Hello, my name is Carl Tremlin. I'm one of the financial planners at Francis Clark Financial Planning, and this is the financial planning section of the FD seminars. I've been tasked with talking to you about the new pension rules which have come into effect from the start of the new tax year. I know pensions, the automatic assumption with pensions is this is going to be very technical and probably something that you don't need to listen to. You're probably right, because hopefully you've all got really, really good financial planners that make sure that everything is taken care of. But I would just say, and I think the key message from this is pensions, regardless of when they commenced and what the ultimate goal is pensions still remain one of the most tax efficient ways of extracting company money for business owners. As you will know, pensions themselves, the funds within them remain income tax and capital gains tax free. And as the rules stand, they're also inheritance tax free. So in terms of a tax efficient structure, very, very tax efficient. Risk is dictated, investment risk is dictated to by the actual individual, so the business owner potentially. So really very complicated, but with the right support and with the right financial planning and financial planners behind you, hopefully you can reach some really, really good conclusions. So in terms of today, the agenda, we'll be talking about the increased annual allowance. You may or may not be aware that this actually increased mainly as a result of the pressure exerted on the government and HMRC by senior civil servants. We'll be talking about the new lifetime allowance, or the lifetime allowance being abolished and replaced with the new lump sum allowance. We'll be talking about the maximum tax-free cash that can still be taken from a pension fund. We'll be looking at the amendments, the changes to the death benefit rules. Okay. And again, as I said, there will be lots of technical information. Slides will be available for you. But like I said, it's any good financial planner should be fully aware of everything here. So please don't hesitate to ask, like say myself, any other member of our team or your own financial planner. So the increased annual allowance, up to the last tax year, the annual allowance used to be £40,000. And again, if your income was over certain allowances or certain thresholds, it started to taper down. This was having a very negative impact, mainly, or it was highlighted as mainly on, as I said, senior civil servants, consultants within the NHS. So listening to public concerns and listening to civil servants' concerns, from the start of the last tax year, the annual allowance itself was increased from £40,000 to £60,000. The thresholds in which that started to taper increased to £200,000 and £260,000. And the actual minimum tapered annual allowance, so the maximum amount that you could actually contribute if your salary was above the thresholds, was actually raised from £4,000 to £10,000. So regardless of your income and how high that may be and how high that is over the threshold, what you are able to do is still now make an annual contribution of £10,000 per annum. Moving on, if we look at the lifetime allowance is the one that's caught all the press. And it particularly caught a lot of the press because as soon as it was announced that it was going to be abolished, Labour immediately said that they would be reinstating it as soon as they got into power, should they get into power. That has actually now, or the abolishment of the lifetime allowance has now actually received royal assent. So to actually backtrack and reinstate the lifetime allowance would be incredibly difficult, if not nigh on impossible. So it would probably form some other form with some other numbers involved. But as we stand today and as we look at the rules today, the lifetime allowance has been abolished. It was abolished on the 6th of April 2024. And for the previous tax year, effectively, it still remained in place, but any benefits over the lifetime allowance relevant to you was taxed at 0%, which kind of sounds as if it's the same thing, but like I say, going forward now, it's actually been abolished and there is no lifetime allowance. Pensions is an industry which loves an acronym. So we've got rid of the LTA, which was the lifetime allowance, and we've replaced that with the lump sum allowance, the LSA, the lump sum and death benefits allowance, the LSDBA, and the overseas transfer allowance. These are now all set, and we'll go into these in further detail in a minute or two. But as with many other reliefs and allowances that currently exist within the United Kingdom, these allowances are frozen with no provision for increases in the future, although there could be, depending on what happens. If we move to the lump sum allowance, the lump sum allowance is effectively the amount that can be taken as a tax-free lump sum. Many of you would have heard of it as the pension commencement lump sum. We used to call it the tax-free cash sum. This never-ending changing of acronyms, it's now called the lump sum allowance. And the lump sum allowance is currently set at £268,000, sorry, £268,275, which is effectively 25% of the last lifetime allowance, which was £1,073,100. If you're one of those individuals that secured some form of protection in the past, then your lump sum allowance may actually be higher than this amount. Any tax-free cash which was paid before the 6th of April 2024 will actually reduce this amount. So what you didn't have is your slate kind of washed clean with effect from the new tax year, and you start from scratch and you have £268,000. Effectively, any tax-free cash that you would have taken in the past is added in, so that anybody retiring now effectively has got this lump sum allowance of 268,275. Well, what is tested against the lump sum allowance? Without meaning to get too technical, that's any pension commencement lump sum, so that tax-free amount that you take when you start to crystallise, when you start to take pension benefits. And there is also this form of taking pension benefits called UFPLUS, UFPLS, and the tax-free elements of those lump sum payments are also tested against the lump sum allowance. So in summary, the pension industry has changed the acronym, but effectively the rules very much have stayed very, very similar, which is the maximum tax-free lump sum, the tax-free element that you can take is 268,275, unless you have some form of pension protection. Moving on now to the lump sum death benefit allowance, lump sum and death benefit allowance. This represents the maximum tax-free cash that can be drawn by you or by your estate on lifetime and on death. So effectively, it's that the lump sum allowance, the maximum you can take, plus an additional amount which on your demise could be paid as a lump sum to your beneficiaries. And as you can see from the slide, that has been set at the old lifetime allowance of £1,073,100. So even though you'll keep seeing that even though you will see the headlines that the lifetime allowance has been abolished, the new rules do keep making reference to that old lifetime allowance limit. All lump sums paid on death or serious ill health will be tested against this new lump sum and death benefit allowance. And it's a combined allowance, as I've said, of both the lifetime tax-free cash and death benefits that are paid on your early demise. If we now look at an example to illustrate that point, Claire, 65, she has a self-invested personal pension. It's worth £1 million, and she withdraws her £250,000 pension commencement lump sum. Now, this is tested, first of all, against their lump sum allowance. Is it worth less or more than £268,275? Well, it's worth less than that. So the maximum remaining lump sum allowance that Claire has is £18,275. Should Claire pass away, then effectively her beneficiaries could receive a maximum lump sum tax-free of £823,100, which is that 1,073,100 minus the pension commencement lump sum that she has already received. If she dies before the age of 75, the maximum lump sum of death benefits payable, like I said, would be 823,100. If any lump sum payments are paid in addition to that amount, then it would be taxed at the recipient's highest marginal rate of tax. Now, there is a great and unobvious planning opportunity here, is for any benefits that are in excess of that amount, Claire's beneficiaries would simply receive those benefits as a regular income and not as a lump sum. And that difference in payment method would actually ensure that the tax reduces from highest marginal rate to tax-free should Claire pass away before the age of 75. Moving on, the new death benefit rules. So there's no longer a distinction between crystallised and uncrystallised funds. Crystallised funds being those that which you've taken benefits from, uncrystallised funds being those funds that have been effectively left effectively just to grow as an investment structure. So death benefits before the age of 75, as we have said, as a lump sum, the maximum, assuming you have no protection in place, is £1,073,100. Any excess, if paid as a lump sum, as at the beneficiary's marginal rate. Likewise, if it's taken as an income, then any excess of that amount would actually be tax-free, as we've already covered. For death over the age of 75 or later, then there is no change. The rules that currently exist have not changed, and any lump sums that are paid to beneficiaries are paid taxed at the marginal rate of that beneficiary. So, in summary, what we have seen is pensions still remain incredibly complicated. The acronyms have changed, but many of the rules are still the same. But likewise, many of the rules have also changed. The annual allowance, the amount that a business owner can extract from the business as a tax-efficient pension contribution is increased, and allowing for income, that can be £60,000 per annum, with any unused allowances carried forward from up to 3 years in the past. The lifetime allowance has been abolished and replaced with the new lump sum allowances. Protection is now about lump sums. And finally, the death benefit rules for those passing away before the age of 75 have changed.